What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 30. It's July 21st, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about all of the important levels that we have on the chart today. So let's start off with yesterday's closing price, which is represented by this purple line right down below at this level. Now this level is represented by 35,398. So keep that price in mind because it will be important as we go throughout today's session. So that's pretty much the most significant level that we have on here. Everything else are just zones that we drew up in the pre-market and then just extended it out throughout the rest of the session. And this red line up here represents one of the highest prices that we were able to get to today. Not quite the highest price, but definitely a major level that we haven't been able to break through from the time the market opened until the time I took this screenshot at around 10:50 this morning. So let's go ahead and jump into our analysis. Let's start at 9:30 when the market first opened. So we see that we sold off initially, came back to the bottom of the zone, eventually created a double bottom that pushed us back up to the top side resistance at 490. Now from that point forward, we saw nothing but selling coming to the market that pushed prices back down through the zone, back down through the zone below that one, and then eventually came back to around 350. Now, after that, we had a push back up to the top of our lowermost zone that eventually led to one of my favorite setups, which is a downtrend reversal that has a higher low that gets established. Now, when it comes to these setups, they're actually pretty lucrative because they give you an opportunity to catch the uptrend when it's first beginning. Now, the only thing about it is that it can be tricky sometimes because you got to remember the overall market context that you're trading within. Now, if it's a day where the market is down by like 300 or 400 points and you see a move like this, a higher low reversal could work, but it might not last as long as this one did. You got to remember that throughout this week, I think this is July 21st, so this is the 20th, we had an uptrend. The 19th, we had an uptrend. The 18th, we had an uptrend. The 17th, we had an uptrend. So every day this week, the market has been moving up. So more than likely, if you have any real sell-offs like we saw today, it's not guaranteed that that sell-off is just going to stop. But there is a high probability that the buyers that were here all week are going to step in once again. So you always want to take market environment into consideration when you're using this strategy. But what I have found over time is that this strategy works in both uptrending markets and downtrending markets. The only thing is, in a downtrending market, this setup is just going to give you just a slight pullback and not so much of a reversal. So if the downtrend was really strong today, you might have been able to get that higher low, but prices probably would have stopped at the top of the zone and then reversed. So that's what will happen when you encounter this scenario on a down day. But when you can encounter this scenario on an uptrending day like we were today and like we were this week, usually that higher low is going to be the beginning of a move that'll probably last more than 100 points and probably more than 1 or 2 hours. And that's exactly what we saw today as well. So always keep that in mind, that this setup is very lucrative, and depending on what the market environment is, you can either get a really nice scalp or a really nice trade that you can hold for a while. So always keep that in mind. So when it comes down to the mechanics of this trade, what you want to look for is, first and foremost, you need that strong push to the downside. You always need that. And then you want to have a sharp reversal back up to the upside that creates a higher low. Now, once you see that higher low get established, that's when you know that this scenario, this setup is confirmed. Now, once you see that higher low get formed, you just want to see prices move away from the higher low, and then you want to see them come back to retest that level of support that the higher low established. Prices should be able to find support at that level, and you should see the uptrend continue in most occasions. I would say probably like 80% of the time, it'll probably work out that way. And that's exactly what led me to trade one. So I went long after seeing prices come back to retest the support level at a higher low. Now, on this day in particular, today I got stopped out, but we can see that this trade was very, very successful, even though we did get stopped out. Now, the reason I got stopped out was because my entry was just a little bit less than perfect. Because usually if you want to get into this setup, you should go long at the lowest level of support that you can find from that higher low, because a lot of times you'll have a debate between Should I go long at the bodies of the higher low, or should I go long at the wicks of the higher low? What I've learned is that going long at the bodies will ensure that you get into the move. But a lot of times prices are going to come back to test that lowermost wick. So I've learned a lot to just wait for that wick. And then when it touches that wick, I'm going long because I'm like, okay, they came back to retest the lowest prices and now we're moving up again. But sometimes like today, I might put my order just a couple points above, that lowest level of support. And today it came back and stopped me out for break even. So sometimes that's just how it goes. But always remember, the best ideal entry is that lowest wick for that higher low level of support. Now let's go back to the notes real quick and let's just go through a couple of examples so I can show you how this setup works. Now this right here, if you look at what we traded today, this looks almost like an exact carbon copy of what we saw, right? But this is actually from November 17, 2020. So this was 3 years ago, but the price pattern, even though it's 2023 right now, still remains the same because markets usually don't change. Price patterns remain the same because human psychology remains the same. So that's why these setups usually have a tendency to be very successful. So look at how we had the sharp downtrend, and then we had our sharp reversal that established a higher low. Now in this scenario, we didn't really have an opportunity for prices to come back and retest that higher low. They created that higher low and then they moved on from that point forward. So that's another thing about this setup. There will be scenarios where you get that higher low and then you have a retest of that higher low. But there will also be scenarios like this one where it's a higher low that gets established and then prices move on from that point and never come back to retest it. So always keep that in mind. Now this right here was an example of where you had a retest of that higher low. So notice how we had a downtrend reversal, right? Well, excuse me, we had a strong downtrend. We had our sharp reversal back to the upside. Well, really, the sharp reversal ended right here, and then we established our higher low. We can draw our level of support based on the wicks, stretch that across, and then look at what we run into. We see prices eventually come back, retest that level, and then continue moving higher. So when it comes to this setup, that's exactly what you want to look for. Notice how all of these charts almost look exactly the same. Now these two charts, they should look the same because all three of these were drawn from the same day. But as we continue moving forward on different days, you still get this setup happening in multiple different ways. So whenever you have that sharp downtrend and you get that higher low that gets established, remember to respect that higher low. And that's the reason that I titled this video, Higher Lows Don't Lie, because a higher low is going to tell you exactly what the market wants to do. Because if you really break down the psychology behind the higher low, it really makes more sense as to why it leads to higher prices more times than not. Because think about this. If we were in a downtrend like we were on this day, this was from April the 12th, 2023. So if we were in a downtrend like we were on this day, and then all of a sudden the selling just stopped right here, that would make you wonder, if we had enough momentum to go from 34,060 all the way down to 33,780 within the span of less than 30 minutes, and then we just stopped all of a sudden, what caused the momentum to stop? Well, it's only one thing that could happen that would cause that. It was more buyers than sellers at that price point for whatever reason that might be. Maybe it was a bigger buyer on the higher time frame chart that saw this level as an important level of support, so they stepped in and went long. Or maybe it was a whole lot of sellers that saw this level as an important exit point, so they took profit. But more than likely, it's probably a combination of both of those things. And those two things coming together allow the buyers to actually outweigh the sellers, which reverses the prices at that point. So prices continue up, continue up, continue up. But then we see sellers step back in and push the market down because the trend is down. So that's exactly what we should expect. But if the sellers are not able to push prices all the way back down to retest the lowest prices that they just made, that tells us that even though the sellers are still in the market, the buyers at this point in time, at this exact moment, have been able to take control of the market. So if the buyers have control now, we just have to expect for them to continue to have control until the sellers step back in again. So you'll notice sellers step back in when you see a lower high. But until that gets established, you just got to rock with the fact that the buyers established a higher low and they took back over. Now, from a psychological perspective, the buyers are going to come in and try and defend that higher low, because think about if you was a major operator in the market and you was the one who came in right here and bought hundreds or maybe thousands of contracts so you could help kind of absorb the selling that was going on. If prices come back and retest the higher low that you just kind of established with your position, what is that buyer going to do right there? Or not just, it doesn't have to be a singular buyer. It could be a collection of multiple buyers with large size. But what are those buyers going to do at that point in time? They're going to add to their position because they looking like, hey, if we had enough momentum to absorb the selling that happened at lower levels, we should more than likely have enough contracts to buy where we can absorb all of the selling at these higher levels also. So that usually leads to the higher low continuing. So just always remember the psychological, I guess the psychological makeup of what a higher low represents in terms of market movement. And also remember that the best scenarios usually happen where you have that higher low get established and then you get it retested another time. So always keep those things in mind when it comes to a downtrend reversal that has a higher low that gets established. So let's go ahead and go back to today's chart and let's move on and keep moving forward. So after we see that higher low get established, we come back, test the top of the zone, we create another higher low from that point. Now on this scenario, notice how this higher low didn't really have a retest, unless you want to count this as the retest, but these wicks never really came back to test this lowermost wick, so we can't really say that that level got retested. So remember once again that you can either have a single test higher low or a double test higher low. It all depends. And there also will be scenarios too where prices might come back to retest that higher low like 3, 4, 5, 6 times. Let's actually just go back to the notes real quick because I think I have an example just like that. Let's just scroll through these real quick. Let's see. Okay, here it is. Here's one right here. So notice how we had our downtrend, sharp reversal, higher low gets established. But once that higher low got established, we came back to retest that level multiple times with these wicks. I think I got one more. Where is it? Okay, here it is. So look at how we had our downtrend, and then eventually we created our higher low. But we came back to retest that higher low not once, but 2 times on this occasion. So always keep that in mind as well. So let's get back to today's chart. So we came back, retested the bottom of the zone, a higher low got created, pushed back up to the blue zone. The uptrend continues once we establish another higher low. Now, throughout this time period, I was just observing the market. I was trying my best to get in, but I wasn't quite sure about whether or not the uptrend had enough room to continue, because I was like, look, we came back to these double bottoms. I thought that the market was going to reverse right there. So I was kind of hesitant to go long right here when we made this higher low, because I wasn't quite sure what this bearish engulfing candle was going to lead to. So I just kind of sat back and I was like, you know what? If I'm not sure about the trade, I don't have to take it. And I think I did a really good job of being disciplined right there. Even though the trade would have worked if I would have took it, if I'm not sure about it, then I just need to wait for a better opportunity, because there's nothing in the market that's forcing you to take a trade. You can take the trade that you want to, and if you want to sit in front of the market all day and not trade at all, you can do that too. It's all up to you as a trader. So make the right decisions based on your trading plan. So after we see that higher low get established, we see prices eventually break above the blue zone, come back, retest it, and then move back up to resistance. Now, once we fell off from resistance once again, that's when I started to get a little bit active, because I was saying, okay, if we haven't been able to break past that level all day and we just had another sell-off after we hit that level the same way that we did before, I feel like we might run into another sell-off like that. So that's actually what led me to trade number 2. So I went short here after seeing a post pattern form and my break even stop got hit. Now, if you guys want to know more about post patterns, make sure you go and check out all of the videos from this week, because that's one of the setups that we've been seeing very consistently throughout this week of July 17th through July 21st. So make sure you guys go check that out. Now this kind of pretty much checked off all of the qualities that we look for a post pattern. So we look for that high volume candle with a tall range, tall body, little to no wick on the top or bottom that has high volume. So this candle pretty much checks off all of those boxes. The only thing I would say is that the wick on the bottom side is a little bit larger than I would like, but in this scenario, because we've already seen what happened the last time prices got up here to this level, and then we saw what happened this time, we say, okay, we can accept this candle on this occasion. So then we look for our second candle formation to be a little bit of a squarish body that closes red but doesn't move too far. That's exactly what we got. So once you see that, then you just go short on the close of that candle immediately on the close of that second candle formation. And that's what I did right here on this next candle. Went short right there. Had an opportunity to maybe take a smaller profit, but I was like, look, man, if the trend is this strong, I shouldn't take profit until it hits my profit target. Let the trade run. Now, that just wasn't the scenario today where we had a trade that could run. So it eventually came back up to my break even stop. And you know what? That's okay with me. Now, when it comes to my break even stops, one thing I don't want to do is continue to force the issue. So I think I made a good decision right here by not trying to go short once again, thinking that, oh, well, it has to go short. No, it doesn't. Now, what I did see was this higher low right here, and it was kind of hard to see at first because you really got to pay attention to how these wicks and these bodies interact with each other and how they form and how they close. So let's take a look at that really quick. Let's start at this swing low that we established. So this is a swing low at around 35,415. We pushed higher on the next candle, but then closed a little bit lower. So if you look at it, we went down, we came up, came back, came up once again. So even though it doesn't look like it, this is actually a higher low when you look at how the price action really moves. So I circled that up, recognized it, and then once I saw that higher low, I was like, okay, any idea I had about going short, let me throw that out of the window. And that's really what you want to do when it comes to higher lows, because I can't tell you how many times I've seen a higher low and then still tried to short against it and ended up taking a big loss on that. Most of the time, I would say like 90% of the time, going short against higher lows is just a recipe for disaster. It rarely works, and that's one of the main lessons that I actually keyed off of today when it came to trade 3, but we'll get to that a little bit later. So once we made this higher low right here, we pushed back into the zone, retested the top, and then came back to create another higher low. Now once we had those two higher lows that got connected, I like to draw a trend line across those because usually that third touch on the trend line is going to be the most lucrative. So in order for me to see a trend line get established, I need that first higher low and then the second one, and then I connect the trend line between those two. So that's exactly what I did right here today, and that actually led to trade number 3. So let's talk about that. So on trade 3, I went long here after seeing a higher low and a successful breakout retest. So we talked about the higher low. We see the higher low get established right here, but we also had a breakout of the zone. Now this was a very small breakout, not the best, but it still qualified. So make sure you guys go back to yesterday's video where I talked about using breakouts to trade a trending market. I use that exact same strategy today that I used yesterday. So let's go over that one more time really quick. So whenever you have a zone and you're looking for a breakout strategy, the first thing that you want to look for is you want to make sure that the overall trend is definitely strong. Now today is no doubt about that. We know that the trend was strong, and we know that the trend has been strong to the upside all week. So we can check that check mark off in that box. The trend is strong. So therefore, we can start to use or start to look for potential breakout strategies and areas that we can use that strategy from. So when you want to see prices break above the zone and you want to have a candle that closes above and below that zone, meaning that, well, not above and below, you want to have a candle that opens and closes above the zone. That's very important. If the candle doesn't have both of those criteria, then the breakout is not legit quite yet. But once you have that candle that closes above and below, that's when you can start looking for your entry points, because now you have a good idea about what the breakout represents. So now all you need is your retest. So you wait for prices to come back, retest the level that the zone broke out from, and then once you see prices start moving away, that's where you want to go long from. And that's exactly what I was able to do today at trade number 3. I saw this initial candle break out of the zone, close above it, close above it and open above it. Now, this wasn't the best candle per se. It was actually pretty ugly. If you was only looking at this candle and this one, you might have thought that it was a double top, but overall, because the overall market trend was up and we had those higher lows, I said, look, I understand what this candle usually represents, but based on the market scenario that I'm in, the only decision that makes sense right now is to go long. So that's why I went long right here at trade number 3. So always remember that you definitely want to take into consideration what the candles look like, but you also want to weigh that information against what the overall trend is telling you. So always make sure that you're consistently comparing the relationships between those two so that you stay on top of the market and you trade in the right direction. So I think overall, man, that's just a good example of how successful breakouts work and how higher lows and successful breakouts kind of interact with each other. So that was my last trade for the day. I decided to call it. And overall, man, it was a great day, a great week. I think this is the first time I actually thought about this week, but we started on the 17th. No, I took a loss on the 17th. I was gonna say that I traded profitably all 5 days this week, but I did take a loss on the 17th. But the 18th, I was profitable. 19th, same thing. 20th, same thing. And today, same thing. So did a good job this week, man. The main thing I focused on was getting good practice sessions in. Like when I tell you I was really getting to it this week, I was getting to it. I would come home, get off of work at like 10, and then I would study from around 10 o'clock to around 2 in the morning until I just couldn't go anymore. Just making sure that I corrected all of my mistakes from all of my past trade reviews, just trying to get better. So I want to continue moving forward with that same type of work ethic. And going into this weekend, I want to focus on taking the right trades when I'm back testing. I want to focus on being patient, being disciplined, and really sticking to my strategy, because when I do all of those things, I think I set myself up for success. So I appreciate you guys for tuning in with me this week, man. I hope you guys learned a whole lot, because I know I definitely did. I'll be back on, today's the 21st, it should be 22, 23. I'll be back on the 24th on Monday around 9:30 a.m. to 9:40 a.m. But until then, you guys, take it easy and have a good weekend.